I just found a stock that generates the same amount of revenue as Netflix, but is valued at 17 times less on the stock market. Let's dive into the details of why this company is worth so much less than Netflix and whether there is an opportunity to make money. The stock I'm talking about is Warner Bros. Discovery with the stock ticker WBD. I first bought this stock on August the 8th, 2022, so actually more than 2 years ago, and I haven't really added much more money to the position over the past 2 years, or at least until now, because now I finally think the stock is so undervalued that the massive potential gain completely outweighs the risk. Firstly, we'll go over why I think the stock is so undervalued, then what are its risks, and finally what could the stock realistically be worth in a couple of years. I won't spend too much time on what the company does because I think most of you recognize the name, but in short, Warner Bros. Discovery is an American multinational mass media and entertainment conglomerate. The company's business is composed of 3 main segments. The studio segment, which is basically the part of company that produces movies like Dune Part 2 and games like Hogwarts Legacy. The network segment, which as the name suggests consists of networks like CNN, Discovery and TLC, and finally the direct-to-consumer segment, which consists of HBO, Max and Discovery Plus streaming services. All these segments combined contributed to $9.7 billion of revenue in Q2 2024, or almost $40 billion of revenue in the past 12 months. Meanwhile, Netflix, another streaming giant, made only $36 billion of revenue in the trailing 12 months. And yet, Netflix stock has a market cap of more than $300 billion, while Warner Bros. Discovery has a market cap of less than $20 billion. Obviously, there is a reason why the latter company currently has a way smaller market cap, and we'll get into that in just a moment, but you can already see the potential WBD has. If we look at the most recent earnings report, we can see that about 24% of the revenues came from the studio segment, 51% from the network segment, and 25% from the direct-to-consumer segment. Obviously, in the future, we can expect the network segment to generate less and less revenue, while the direct-to-consumer segment picks up more and more revenue. The company has 103.3 million direct-to-consumer subscribers, with the average revenue per user being $8. Netflix has about 277 million subscribers, and Disney Plus about 153 million subscribers. So Warner Bros. Discovery has a lot of potential subscribers it can get, even if we don't account for the fact that all streaming services will get more and more subscribers over the years, as more and more young people won't even get cable and just subscribe to streaming services. One of the reasons why I also think Warner Bros. Discovery has a lot of potential to grow is that I just honestly think they make better content. Now, don't get me wrong, Netflix has a ton of great content, but most of that content came out years ago, and the movies and series that came out in the past couple of years are mostly unwatchable. Meanwhile, Max is still releasing very high quality content, although it comes at a cost of low quantity. So if the company generates the same, if not more revenue than Netflix, why does it have such a small market cap? Well, firstly, Netflix is profitable while Warner Bros. Discovery is far from it, at least for now. And secondly, the company has a lot of debt, $41 billion of debt. Let's take a look at the first issue. Even though Warner Bros. Discovery generates around $40 billion of revenue a year, it currently isn't profitable. You see, before the company formed from Warner Media spin-off by AT&T and merger with Discovery, it was generating about $1 billion of net income on about $12 billion of revenue. But after the company was formed, its expenses jumped up due to merger-related costs, content investments, and debt servicing. Luckily, this is only short-term, with the company expected to reach profitability in about 2 years. As for the second issue, the company has $41.4 billion of gross debt and $3.6 billion of cash on hand. Ideally, you would want to see very little of that and a lot of cash. Luckily, there is light at the end of the tunnel. Since Q2 2023, the company has been repaying an average $1.6 billion of debt per quarter, reducing the debt from $49.5 billion in Q1 2023 to $41.1 billion in Q2 2024. So if the company really wanted to get debt-free, and if we assume it continues to repay debt with the same rate, it could get debt-free in about 6 to 7 years. The stock is right now trading in the range between $6.71 and $8.78, with the book value per share being $14.01. 100%. If the stock were to rise back to its book value, you're already looking at a 75 to 100% gain. On top of that, its price to sales ratio is also extremely low at just 0.46, while the Netflix's is at 8.84. Realistically speaking, once the company becomes profitable, its stock price should rise back to at least its book value. Having that said, I believe the company can get to a market cap of about $100 billion by 2030 once it also lowers its debt and continues to grow, which would put the stock price at about $40. On top of that, I believe the stock isn't really that risky once you consider that despite not being profitable, it's still generating positive free cash flow. So there is definitely huge potential in the stock, and I don't really see high debt or unprofitability as the main concern, but whether the company can grow its streaming service and with it replace the revenue from the cable. I believe it can because I think it has better content than other streaming services as I continue to watch more and more content on Max and less on Netflix. Another thing I didn't mention is the fact that you could watch the Summer Olympics on Max, and that could have had an impact on growing subscribers in the past quarter. The company is reporting next earnings on November the 7th, so we'll get a clearer picture then. Having said all that, I've sold all of the small positions I still had left from more than 2 years ago and bought more of Warner Bros. Discovery, bringing my total position to about 27 shares at an average buying price of $8.42. I want to add more to the position, but currently don't have the free funds to do so. However, if Intel by some small chance rises considerably after its earnings report on October the 31st, I might sell some of it to buy Warner Bros. Discovery before its earnings report. Now just a quick update on Luminar Technologies. I'm still holding the same number of shares as before. On October the 30th, the company will have a special meeting of stockholders where they'll most likely discuss the possibility of a reverse stock split. That in itself isn't even that bad and won't change anything except it gives the company a chance to further dilute the stock without getting delisted from the Nasdaq. They said that they need an additional $100 million to get to profitability, so if they decide to do a reverse stock split and then get the funding from dilution, we're looking at about a 23% dilution. If that happens, the stock will fall further down, which is why I've decided to not add more money to the position until we get more information. Recently, Luminar Halo won Best Industrial Design Award from Silicon Valley UX Awards. That is in my opinion meaningless, but it did give us a bit more information about the Halo, which is supposed to come out in 2026. And well, the main information for me was that the Halo can be mounted behind the windshield and work normally, which would eliminate one of the main criticisms of LiDAR, the so-called LiDAR bump. Meanwhile, the first ASTS satellite has been unfolded, with the following 4 probably getting unfolded in this week. Having that said, we can expect the next earnings report around November the 12th and an update on the satellites around October the 22nd, but that's just a guess based on the company's posting history. Having said all that, this is purely for entertainment purposes, and if you want to see more of my content, click on the video that just popped up. If you like my content, make sure to subscribe, and thanks for watching.